Hello everyone! Welcome back to the Insurance Vault. If you're like most people, you probably think that car insurance is just one of those unavoidable expenses that keeps rising year after year. But what if I told you there are secrets to slashing your car insurance premiums, saving you hundreds, maybe even thousands, each year? In today's video, we're going to reveal 5 secrets that can help you lower your car insurance rates without sacrificing coverage. So, whether you're a seasoned driver or just getting started, stick around for these easy-to-implement tips that can save you big. Let's get into it. First, shop around and compare quotes. Now, this might sound like a no-brainer, but you'd be surprised by how many people settle for the first car insurance quote they get. Insurers have different pricing models, and the same coverage can vary widely from one provider to another. So, shopping around is a must. What do you need to do? Well, it's simple. Get quotes from multiple insurance companies. Use comparison websites or talk to an insurance agent to get quotes from at least 3 or 4 different companies. Consider both big names and smaller providers. Sometimes smaller, regional insurers can offer better rates than the bigger, more well-known ones. Check the coverage options. When comparing quotes, make sure you're comparing the same types and amounts of coverage. A lower price might seem appealing, but you don't want to end up with inadequate coverage in the event of a claim. By shopping around, you're more likely to find a provider that offers better value, helping you save money without compromising on your coverage. 2. Raise your deductible. Your deductible is the amount you'll pay out of pocket before your insurance kicks in after a claim. By increasing your deductible, you can reduce your monthly premium significantly. Here's how it works. Lower premiums. The higher your deductible, the less risk the insurer assumes. This leads them to offer you lower rates. How much should you raise it? If you have a clean driving record and you're financially stable enough to cover a higher deductible in the event of an accident, it's a good strategy. For example, if your current deductible is $500, you might want to raise it to $1,000 or even higher to see substantial savings. Be prepared. While this is a great way to lower your premium, make sure you can afford that higher deductible if something happens. So, only raise it as high as you're comfortable paying out of pocket. But don't raise your deductible too much, especially if you're in a higher-risk driving category, like a young driver or someone with a spotty driving record. You want to balance saving on premiums with protecting yourself in case of an accident. 3. Take advantage of discounts. Did you know that insurance companies offer a ton of discounts that can help lower your premiums? And a lot of people don't even know they qualify for them. Here's a breakdown of some discounts you may be eligible for. Good driver discount. If you've had no accidents or violations for a certain number of years, you could be eligible for a lower rate. Bundling discounts. Many insurance companies offer discounts if you have multiple policies with them. For example, you can bundle your car insurance with homeowners or renter's insurance to save money on both. Low mileage discount. If you don't drive much, some companies will offer you a discount based on the number of miles you drive annually. Safety feature discounts. Cars equipped with anti-lock brakes, airbags, and anti-theft devices often qualify for discounts. So, make sure to tell your insurer about your vehicle's safety features. Student discounts. If you're a student and maintain a good GPA, you could qualify for a student discount. Some insurers even offer discounts if your child is away at school without a car. Defensive driving course discount. If you take a defensive driving course, many insurers will lower your rates because they consider you a safer driver. Make sure to ask your insurer about all available discounts. You'd be surprised how many you can stack to save money on your premium. 4. Maintain a good credit score. This one may come as a surprise, but did you know that your credit score can have a big impact on your car insurance premium? Insurers use credit-based insurance scores to help determine how likely you are to file a claim. The better your credit score, the lower your premium might be. Here's why. Why credit matters. Statistically, people with lower credit scores tend to file more claims. So, insurers take your credit score into account when calculating your rates. How to improve your credit score. If you have a lower credit score, take steps to improve it. This includes paying bills on time, reducing credit card debt, and making sure there are no errors on your credit report. How much can you save? If you have excellent credit, you can see savings of up to 30% on your car insurance. That's a huge difference. Even if you're doing okay with your credit score, it's always a good idea to keep an eye on it. You might qualify for better rates just by improving your credit habits. 5. Opt for usage-based insurance, UBI. This is one of the more modern ways to save on your car insurance, and it's perfect if you're someone who doesn't drive as much or if you're a careful driver. Usage-based insurance, also known as pay-per-mile or telematics insurance, allows your insurer to track how much you drive and how you drive. The less you drive, and the safer you drive, the less you pay. Here's how it works. Tracking your driving habits. With UBI, you'll typically install a device in your car or use a smartphone app that monitors how many miles you drive, your speed, braking patterns, and other habits. Insurers use this data to assess your driving behavior and determine your premium. Low mileage. If you're someone who works from home or takes public transport regularly, you could save a lot on your premiums because the less you drive, the less risk you're exposing the insurer to. Safe driving discounts. Some companies will give you discounts for safe driving behavior. For example, if you maintain a smooth driving style, no hard braking or speeding, you could see an even greater reduction in your premium. Pay-per-mile option. If you don't drive often, you can pay for coverage based on the number of miles you drive rather than an estimate. So if you're a low-mileage driver, this could be an excellent way to reduce your premiums. Who should consider UBI? Occasional drivers. If you're someone who uses a car only occasionally, like running errands or weekend trips, usage-based insurance can really work in your favor. Safe, experienced drivers. If you're a careful, experienced driver who drives defensively, many insurers reward you for that by offering discounts through UBI programs. Now, while UBI can be a great option for saving money, it's not for everyone. If you're someone who drives a lot or tends to have unpredictable driving patterns, this might not be the best option for you. But if you can control your mileage and driving habits, it's worth considering. Conclusion. Alright, so there you have it. 5 secrets to slash your car insurance premiums. Let's quickly recap. 1. Shop around and compare quotes. Don't settle for the first offer you get. 2. Raise your deductible. Higher deductibles mean lower premiums, as long as you're comfortable with the risk. 3. Take advantage of discounts. From good driver discounts to bundling, make sure you're getting the best deals. 4. Maintain a good credit score. A better credit score can lead to lower premiums. 5. Opt for usage-based insurance. More modern way to save. Best for people that don't drive much and have a good driving record. Remember, saving money on car insurance doesn't have to be difficult. By following these tips, you can reduce your premiums and keep more cash in your pocket without sacrificing the coverage you need. If you found this video helpful, don't forget to hit that like button, subscribe to the Insurance Vault for more money-saving tips, and leave a comment below if you have any questions about car insurance or want to share your own tips for saving. Thanks for watching, and we'll see you soon.